Hi everyone, Billy here from TradeProsper, and welcome to our introductory course on what are put options. Whether you are a bull or a bear, options allow you the ability to take on very strategic and directional views with very limited risk, especially if you're a buyer of the options. In this example, if you are slightly bearish, you tend to buy put options. What makes put options interesting is that it's quite often difficult for smaller accounts to short shares outright. In other words, their brokers won't allow them to just sell the shares. This problem is overcome by buying put options because it'll allow you similar exposure to a downward moving market. But what exactly is a put option? A put option is an instrument in its own right. So in other words, you can buy or sell the put option. A put option can be traded on practically everything that's out there, such as stocks, FX, futures, and commodities. It's important to understand, though, that the buyer of a put option owns all the rights to the option. So, in summary then, a buyer of a put option therefore owns the right, but not the obligation, to sell the underlying security, up until some predetermined future date in time and at a predetermined price. Let's look at some terminology that you need to be familiar with when dealing with options. A put option, as we said, is the right to sell the underlying security. So if the put option is written on stock, this will be the right to sell the stock. The strike price is the contract rate of the option. So in this case, the rate at which you will sell the shares if you exercise the option. The premium is something that you pay upfront in order to own the option. And the expiration date is the date by which we need to decide if we're going to use the option, or if not, the option will expire worthless. So let's look at a payoff profile for a put, and this will be at maturity. So in this example, let's assume we own a put option on a share, and the share price has dropped to below our strike rate. At maturity, we can exercise the option and sell the shares at our original strike rate, which in this example is well above the current spot price for the shares, in which case this is a benefit to you. But what if the spot price of the share went the other direction? What if at maturity the spot price is far above our original strike rate on the option? Well, this is where the beauty of options come in. You just don't exercise the option. So you expire your option worthless. And then again, if you still have to sell shares, then you can do so in the open market at the prevailing rates, which is much better than where the current strike rate is. So in summary, a put option's value increases as the spot rate moves lower. Thank you very much for your time. I hope you enjoyed this short session on what is a put option. This is Billy from TradeProsper, and I hope to speak to you soon. Bye-bye.